Hey, welcome to the live stream. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. We've been talking a lot about taxes and how to save money on taxes in retirement, which is really important. Couple of ways to do that. That's what we went over yesterday, and I'll be posting I'll be posting little video snippets from yesterday's episode tomorrow. So please keep an eye out for that. Today, I want to talk to you about the stock market and some indicators that I personally think are flashing yellow warning signs. I feel like my dashboard, I have a dashboard of stocks and bonds and commodities that I look at every day. And I mean, there's actually not a yellow light flashing, but I see how certain assets are trading, which certain stocks are doing, whether if they're industrials or consumer staples or consumer discretionary. I look at oil, I look at airlines, I look at everything is working together. I'm talking about stocks. And I look at international markets, interest rates, and it's painting a picture that we don't know what to do. It looks like the economy is really starting to slow down quicker than we thought. It seems like it's happening pretty quickly. That in a way is good because, well, if the economy slows down, rates stop going up as per the Fed. The Federal Reserve stops raising rates. But, it's not really a good thing. It indicates that the economy is weak, and maybe the economy is so weak that the Fed has to cut rates. And that, you think, well, that's good for the stock market. It's good, but the cycle doesn't stop. If things are really slowing down to the point where we go into a recession, lower interest rates aren't enough to save us from a bear market that could follow, historically speaking, because it takes a while for the lower interest rates to work their magic work through the economy, just like it took a while for the higher interest rates to work their way through the economy, through different corporations, et cetera. So I don't necessarily think that if the Fed cuts rates tomorrow, if the Fed had to cut rates pretty quickly, that actually sends a panic feeling into the heart of investors. So what appears to be happening is a slowdown. Revenues, earnings, and a lot of people said, well, we think the earnings and revenue trough at American companies is over. People are allowed to make whatever predictions they make, but we were supposed to be seeing lots of different things take place in the market now. We were supposed to see an end to rate hikes. We were supposed to see oil come down. In the meantime, oil continues to march higher. So I'll show you the key thing on my dashboard that I'm looking at that just shouts warning. And every time this goes above a certain level, I'm going to show you that we go into another drop in the market. So I'm going to show you that in a minute. I'm going to run the quick intro, and then we're going to just wrap this up pretty quick. So stick around. We're going to talk about the stock market. It's going to be very educational, very interesting, and I'll make it as happy as I can. Here we go. Welcome back. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. We're here every Monday through Thursday. And if you're watching and if you have a question, whether if you're watching during the live stream or in an encore presentation in the replay mode on my timeline, if you have any questions, go ahead and ask. If you're watching from Facebook, right in there, Facebook in the comments, LinkedIn, right in LinkedIn. I'd love to hear from you. It's the best part about what I do. And I just enjoy that. So if you have any questions, hit me up in the comments. Words of wisdom, words of encouragement are always appreciated. And if you don't mind, give us a thumbs up or a heart or a wow reaction, whatever it is, depending on which social media platform you're watching. And how about them Jets? Aaron Rodgers. Yeah, it's just the Giants get blown out 40-0. The Jets lose Aaron Rodgers after a whole summer of hype. New York football, it's going to just be, well, it could be a really horrible season. It's not looking good. We'll see about that. In the meantime, I'm a little groggy today. I think it's because I got my shingles. I got the shingles shot and the flu shot today. So a shingles vaccine and a flu vaccine, both today in the same arm. One arm here, and I'm telling you, I can barely lift my arms right now. My arms are strong, you know? Yeah. I'm pumped. So who is out there? Oh, let's see. Carmine, LinkedIn. Thank you very much, Carmine, for letting us know. Carmine is watching from LinkedIn. Nice to see you, my friend. Thank you very much for joining me. Let's take it to the tape. Okay. So the Dow down 17. Ordinarily wouldn't think that's a big deal, but the Dow is up about 175 points earlier today. And by the end of the day, just stocks like industrial stocks just started to come in, and it just turned out to be an ugly day. NASDAQ was down all day, but it really went down a good amount toward the latter part of the day, down over 1%. S&P, as usual, is in between the NASDAQ and the Dow Jones. Gold staying below 2,000. Oil, this is a story. Really is a story, okay? Oil is up $1.56 at 88. This is basically, it's time to say oil is having its breakout moment. It broke out of its trading range. It's above its trading range. And that means more pain for everybody. Tomorrow, we're getting the consumer price index. Thursday, we get the producer price index. We'll talk about those numbers tomorrow and Thursday as they come out. But if oil is up, that is not good for the inflation figures. It keeps the Fed in rate hiking mode, which is bad for the economy. You don't want inflation to get out of hand. So we're kind of damned if we do, damned if we don't. We just have to say, except we go through some pain. The VIX, though, is still remarkably low, only at 14. The VIX is the fear gauge. It gauges how much money institutional large fund managers are willing to spend on hedging their portfolios, and it doesn't look like they're paying a lot. Still at 14. That's very, very low. The thing I'm watching, the line in the sand is this. This is the 2-year Treasury bond yield. You see how it's over 5%, 5.018%? When the yield on the 2-year, and this has just been consistent, when it goes to 5%, the market dips. When it gets back to under 5%, the market stops dipping and starts to come back a little bit. This is the line in the sand, and we haven't seen a sustained 5% plus in the 2-year yield. But if it does become sustained, you have to really take a look at valuations of all companies, but especially tech companies, and you have to discount them differently. You basically have it. When this yield is above 5%, it really shows that future earnings of tech companies, any company, but especially of tech companies, are worth less money than we thought. Therefore, when you see the 2-year above 5%, it's just a real negative for the stock market. And if it stays sustainably above 5%, I think you get a sustainable downtrend in the stock market. And then I think at that point, all bets are off to see new all-time highs this year. So it bears watching. The other thing to watch is the big 7 stocks, but they're all down today. NVIDIA, okay, not too far from its well, actually, you know what? NVIDIA was over 500. Now it's under 450. So NVIDIA is down about 10% from its high. Alphabet, which is Google, is still hanging in there. This is a little too big for the screen. Let me just lower this a little bit. Okay, that's a little better. All right. Amazon is hanging in there, but Apple, they introduced their new iPhone 15 today. Couple of big announcements, new USB-C charger that they're going to be using because it's already like a universally accepted charger. And that's pretty cool that Apple is getting away from their own kind of lightning charger to using what everybody else is doing. But nonetheless, they came out with new announcements, and it was just a big yawn. It's a lot of money to spend for such a minor upgrade on a phone. The 14 came out. I don't know if like a 14S came out. I don't remember an S series. I think just was the 14 and the 15, whatever. The 15 is If you ask Apple, it's something special. I have a 14, just a plain old 14. I see no reason why I would upgrade, but maybe if you have a 10 or 11 or 12 iPhone model, you would consider upgrading. Microsoft down 6, starting to get to be a distance from its high. And we also have Tesla and Netflix coming down. So this is just a really tough day for the mega large cap tech stocks. The way they traded today, I'm surprised. I'm surprised the market wasn't down more, especially in the Nasdaq. So what's going on is worries about the slowdown in the economy is overtaking the positives of the Fed pivoting slash pausing and then pivoting. And I think the hope for soft landing is now being tested. And if you were betting on that, well, this is your moment of truth. And now you might say, maybe I don't want to be in this bet anymore because it's pretty scary when that moment of truth happens. That's what's happening with the market. We'll see as things develop. It doesn't mean you change your financial or investment plans. It doesn't mean you stop investing in your retirement plans. It doesn't mean you stop saving money. This too shall pass. It's just that while they pass, they can be very painful. And hopefully what you have in your investments is the type of thing that'll recover on the next side of a bear market or recession. If you want to know more about those things and to talk about what you have, you can always reach out to me. We could speak one-on-one. You can check out clientfirststrategy.com. That's our website. Reach out to us. We'd be happy to speak with you. And on that note, I'll end this live stream and I'll be back tomorrow. Thank you very much.